Hello students, welcome back to Accounting 1304, Introduction to Accounting 2. This is Dr. Mercado speaking. I hope all of you are doing well and are excited as we are covering Chapter 16, which deals with accounting for accounts receivable. Now, this next problem that I'm going to be covering is super important. Let me just make sure, let me grab my notes here. Let me see. Yes. Okay, so problem 69, which is what I'm going to cover in a minute, deals with uncollectible accounts using the percentage of sales and the percentage of receivables. And you are going to have a problem like this in your test. Okay, so it's super important that you learn how to complete this problem. Okay, so by the time that you get to attempting problem 69, you should have read the entire chapter. I am not going to go over the actual content of the chapter. I'm just going to go straight into problem solving. This is a little bit of a lengthy problem, so I'm just going to skip into calculations. If you have any questions after you read the chapter, please do not hesitate to contact me. Okay. So like I stated before, extra attention. This problem is going to be on your test. Okay. So the problem deals with uncollectible accounts using the percentage of sales and percentage of receivables. It says, at the completion of the current fiscal year ending December 31st, the balance of accounts receivable for Yank's gift shop was $30,000. Credit sales for the year were $355,200. Required, make the necessary adjusting entry in general journal form under each of the following assumptions. Show calculations for the amount of each adjustment and the resulting net realizable value. Okay? So, the first thing we have to do is record these transactions, and we have 2 transactions per scenario per se. Okay? Let me see. No fill. Okay. Let me just highlight this because it's very important that we know what we're talking about. Okay, so the first assumption is the allowance for doubtful accounts has a credit balance of $330. Now, before we go into the problem, let's identify what kind of an account is the allowance for doubtful accounts. The allowance for doubtful accounts is a contra asset account. It has a normal balance of a credit. Okay, so the normal balance of the allowance for doubtful accounts is a credit balance. Okay, a credit increases the account, a debit decreases. So the allowance, how I see it, is a bucket. Okay, we put money into the allowance for doubtful accounts that we assume or we estimate we're not going to collect. So we put the money into the bucket, we credit the bucket. Okay, so the bucket is holding right now a credit of $330. So we still have $330 in the bucket. Okay. When we take money out of the bucket, we debit the allowance for doubtful accounts. Okay, so when you put money into the bucket, you credit it. When you take money out of the bucket, you debit it. Okay, so that is how it works. Okay, now the first scenario we have here says the percentage of sales method is used and bad debt expense is estimated to be 2% of credit sales. Okay, so let me do the calculation right there. Okay. Well, you know what? Let me just put it in the actual entry. Why bother? Okay. So, this is happening as of December the 31st. Okay. So, they're asking us to use the percentage of sales method. Okay. So, when we use the percentage of sales method, we're going to go ahead and we're going to debit bad debt expense. Okay. And we're going to credit the allowance for doubtful accounts. Okay. Those are the 2 accounts affected. Okay, now the question is how much? Okay, well, we need to calculate the amount based on the information provided. Okay, so we debit bad debt expense, we credit the allowance for doubtful accounts, and it's 2% of credit sales. So the amount of my credit sales, according to the problem, were $355,200, and we assume that 2% are gonna be uncollectible. Okay, so let's go ahead and do that. 355,200 times 2%, that gives me 7,104. Okay, so according to our calculations, $7,104 are not going to be collected using the percentage of sales method. So we're saying out of your credit sales, 2% are not going to be collected, and that equals to 7,104. So that is the amount that we're going to be doing. Bad debt expense is an expense account. The normal balance is a debit. Okay. The allowance for doubtful accounts is a contra asset account. The normal balance is the credit, so we credit the account. And there we go. Now, they're asking us to do two things. Make the necessary adjusting entry, which is what we're doing, okay? And then show calculations for the amount of each adjustment and the resulting net realizable value. So now we need to do that second part, okay? So we're going to have our, let me put it here, our accounts receivable, okay? My accounts receivable, according to the problem, was we had a balance of accounts receivable of $30,000. Okay. Then I'm going to subtract less my allowance for doubtful accounts. Okay. Now for this, I know that I already had $330 in my credit balance. I had $330 in my account, plus I'm putting in an extra $71.04 from this entry, okay? So the amount for my allowance for doubtful accounts is $330 plus $71.04. That gives me $74.34, okay? That is how we got those. Now, the reason I'm adding them is because you have a credit balance, okay? So what does that mean? Is that you had in that bucket, you had $330 in the bucket, and we just put in an extra $7,104 into the bucket. So you need to add them together to give you your total for the bucket. And that's $7,434, okay? And then now we can calculate the net realizable value for our receivables. Okay. And then we're going to go ahead and we're going to get the 30,000 minus your less allowance for doubtful accounts, the total, which is 74.34, and my net realizable value is 22,566. Okay? And remember, the reason that I added my 330 is because I had a credit balance of 330 in that bucket, and then I added an extra 7,104, and then that gave me my total. How much total do you have in that bucket? Well, I've got 7,434 in my allowance for doubtful accounts bucket. Okay, so that is the first requirement that we have here. Okay. Now we have the second part, which is we're going to use the percentage of receivables method. Is used, and an analysis of the accounts produces an estimate of $6,950 in uncollectible accounts. Okay, so the percentage of receivables method is used, and an analysis of the account produces an estimate of $6,950 in uncollectible accounts. Okay, now what are we going to do here? Regardless of the entry that we're doing here, December 31st, we are going to debit bad debt expense, okay? And we're going to credit the allowance for doubtful accounts, okay? Now the question is how much? Well, the problem says, let me just, give me a second here. Okay. The problem says that the percentage of receivables method is used, and an analysis of the accounts produces an estimate of $6,950 in uncollectible accounts. Okay. So here we have to be very careful. Okay. They're telling you that the estimate of the uncollectible accounts is $6,950. Okay. That is what they're telling you, okay? Now, we already had $330 into that bucket, okay? So, but we want the total to be $6,950, okay? So, what we have to do is we're going to go ahead and we're going to get the $6,950, and I'm going to subtract the $330, okay? To come up with how much additional money do I need to put into the bucket to bring it up to the $6,950, okay? So, we want to make sure that the money that's in the bucket tallies up to $6,950, okay? And then that gives us, let me see, $6,950 minus $330, that gives me $6,620, okay? So in this case, the total in my bucket is going to be $69.50. I already had $330 in the bucket, so that means I need to put in an extra $6,620 to bring it up to my desired amount. Bad debt expense will always be debited, and allowance for doubtful accounts will be credited for the $66.20. Now we need to go ahead and figure out the net realizable value. I'm going to start off with my accounts receivable. Okay, we had $30,000 in our receivable. 30,000, 30, 1, 2, 3. Okay, and then I'm going to have my less your allowance for doubtful accounts. Okay, and then that is going to be the $66.20. Okay, that we put into the bucket. Okay, we put in $66.20 into the bucket, plus I already had $330 in the bucket, and then that's gonna give me $66.20 plus $330. That's gonna give me my $69.50 that I needed in there. Okay, $69.50, and then I can figure out my net realizable value. I'm going to get by 30,000 minus my 69.50, and that gives me 23,050. Okay. Okay. So let me format this. Okay. So I had 30,000 in my accounts receivable. Okay. Less my allowance for doubtful accounts of 69.50. That equals to the entry that you just made of 6,620. Plus the 330 that you had, which gives you the 6,950, which is the estimate that they were providing you with. Okay, you subtract those two, and that gives you your net realizable value. So yes, you do have a receivable of 30,000 in your books, but we are estimating that 6,950 are not going to be collected. So my value, my net realizable value of my receivables is 23,050. Okay, so that is 1B. Okay. Now we need to be super careful. Okay. Now for requirement 2, we have a debit balance of $400 in our allowance account. Okay. What does that mean? That means that we took out more money than what we had in the bucket. Okay. Remember, the allowance for doubtful accounts is a contra asset account. The normal balance should always be a credit. If you have a debit balance, that means that you took out too much money. Okay, a credit increases it, a debit decreases it. Okay, so for requirement A, it says the percentage of sales method is used and bad debt expense is estimated to be 1.5 of the credit sales. Okay, so once again, this is happening on December the 31st. Okay, and we're gonna go ahead and we're gonna have bad debt expense. And we're going to have the allowance for doubtful accounts. Okay. Now we need to figure out the amount. Okay. So the problem says that it's 1.5% of our sales. Our sales are $355,200. Okay. So I'm going to go ahead and I'm going to get my $355,200 times my 1.5%. Okay. 355,200 times 1.5%. That gives me 5,328. Okay. So that is the amount that I'm going to be doing my entry for 5328. It's a percentage of my sales, which is 1.5% of my sales. Okay. Now we need to go ahead and we need to figure out our net realizable value. Okay, so I'm going to go ahead and I'm going to start off with my accounts receivable. Receivable, I cannot spell. Okay, and my receivable was 30,000. Okay, then I'm going to subtract my allowance for doubtful accounts. Now here we have to be careful. Okay, we just put into our account 5,328. Okay. And our account was short already. It was short because we had a debit balance. So my account was short $400. I'm going to go ahead and I'm going to subtract that shortage. So that means that the amount that I have on my allowance for doubtful account is 5328 minus I was short 400. That means that I have 4,928 in my allowance account. Okay, 4928. So my net realizable value is going to be the 30 minus the 4928. That'll be 25,072. Okay, so let's recap. Okay, according to the percentage of sales method, I'm going to put into my allowance account 5,328. That's 1.5% of my credit sales. Okay, that's how much I put into my allowance account. But now when I calculate my allowance for doubtful account balance, I know that I just put in 5,328, but I also know that I was short. I had a debit balance. Remember, the allowance for doubtful account should have a credit balance. So when it has a debit balance, it means it's short. We took out too much money from it. So I'm going to subtract those $400 that I'm short, and that's going to give me my balance for my allowance account of $49.28, making my net realizable value $25,072. Okay. Now 2B says the percentage of receivables method is used, and an analysis of the account produces an estimate of 5,685. Okay, 5,685 in uncollectible accounts. Okay, so the percentage of receivables method is used, and an analysis of the account produces an estimate of 5,685. Okay. Okay, now in this particular scenario, because we do have that debit balance, okay, this is happening when? December the 31st as well, okay. Once again, I'm going to have my bad debt expense and my allowance for doubtful accounts. Okay, and then that's going to be, okay, now we need to figure out the amount. It says here that the percentage of receivables method is used, and it produces an estimate of 5685. Okay, 5685. So I know that I need to come up with 5685 into my account. Okay, but I know that I'm short $400. Okay, so if I need to have $5,685 in my buckets for my allowance account, yet I'm short $400 to start off with, what do I need to do? Well, I'm going to get my $5,685, and I'm going to add the amount that I'm short, which is $400. And then that's going to give me 5685 plus 400, $6,085. Okay. So in order for my bucket to have at the end of the accounting period $5,685 based on my estimates, okay, but I know that I already have I'm short $400. I know that in order for us to have the correct balance, I need to deposit $6,085 into my allowance account. Okay, $6,085. That will cover the $400 short plus the $5,685 estimate that I calculated. Okay, now I have to figure out my net realizable value. Okay, my amount is $30,000 for my receivable. Okay, I'm going to less my allowance for doubtful accounts. Okay, and that would be the $6,085 that I just deposited minus the $400 that I'm short. Okay, and then that would give me 6085 minus 400. That will give me 5,685, which is the amount of your estimate. Okay, and then next I can figure out my net realizable value. Okay, that would be the 30 minus the 5685. That will be 24,315. Okay, so it's just a matter here, they're giving you two scenarios. One of them is where you have a credit balance in your allowance account. The other one is where you have a debit balance in your allowance account. Okay, the normal balance of an allowance account is a credit. So that means you have money in your allowance account. When you have a debit balance in your allowance account, that means you're short. Okay, So you need to bring up your balance even further because you have that shortness in your allowance account. Okay. So these are the 4 scenarios that they're being asked for you to analyze and record. I went ahead and I went through each of them, the calculations for the journal entries, the calculations for the net realizable value. Everything is included here so you can study and prepare. Please complete your homework assignment. Remember, 2 attempts are provided, and I do keep the highest grade earned. So if you don't do well on the first attempt, please utilize the second attempt to try to improve your standing in the course. Okay, so that is basically it for this particular lecture. Make sure that you meet the assignment deadlines, refer to your syllabus, that way you don't miss those deadlines. Okay, that is it. I hope all of you have a wonderful rest of your week, and if you have any questions, concerns, do not hesitate to contact me. Okay, have a great day. Bye bye.